May profits be upon you. Welcome to another weekly market forecast. We're looking at the NASDAQ. We're looking at the NASDAQ. I already put the one out for the S&P 500. And I thought we need to put out something for the NASDAQ. Anyway, all right. As far as the economic calendar ahead of us, today is a bank holiday, Labor Day in the U.S. There's one holiday for the Canadian dollar as well. Tuesday, Wednesday, Thursday, these are the days you want to get your trade in this week because Friday is the big day, non-farm payroll, and this is the one that could have a huge impact on the market. It has the potential to reverse the markets, just like the S&P, the CPI data or interest rate data. Those have high impact potential, and you want to be clear. You want to be flat during those times up until the news is announced. And then once the news is announced, then you can get down. All right. Possibly fade the move. Fade the move. All right. Anyway, let's look at the monthly time frame on the NASDAQ. It's obvious the market keeps moving up because that's the way it's designed to do. And we have a break of market structure here to make new highs, new all-time highs, right? We make this high, we pull back, we make a new all-time high, we have a nice strong pullback, and then we have this large bounce there. This was that April pullback. It was a retracement with the tariff declarations and all, and then we have the recovery, and we've exceeded the old high. Great. So the market is bullish. All right. Right now, the market is bullish. All right. On the higher time frame. If we go to the weekly, what do we see? You see my prior markings here, right? Make sure I don't forget to mention any of those things. I'm getting rid of them now. All right. One, this is a new all-time high. All right. We broke this high. That's a structure point, a high, a swing high as a structure point. And once we break it higher, we have reconfirmed anyway, the bullish nature of this trend. All right, with a bullish break of market structure, and this becomes our new high and the swing low, and this is our break of market structure. What do we expect? Price to pull back into this last impulsive leg, and we look for a point where price could find support to continue the trend. Got it? That's the way I break it down all the time. All right, no matter what time frame it is, that's the way you want to do it. Where is the high? Where is the swing low? Where is the break of market structure? All right, and then you find in that impulsive move where the correction could go to and turn around. Got it? Good. What I'm looking at right now is this weekly. What do you call this? It's a weekly. That's not the line I wanted. It's a weekly fair value gap. Right? It's untouched. So there's a high probability that once price does pull back to it, it's probably going to hold for higher prices. Got it? All right. And I'm looking at these under here as a draw on liquidity, sell side liquidity that'll draw a price to it and into this fair value gap. Okay. Boom. Okay. Now, what I want you to notice is that I'm thinking these lows here will be the inducement for price to come on down here, find the support inside of this fair value gap, and go higher. Why do I think that? Because we're talking about external liquidity to internal liquidity. The external liquidity point was here. Price came up, took that external liquidity point, and after it takes an external liquidity point, or ERL, it goes to an IRL, which is a fair value gap. This is internal range liquidity. And what does it do after that? What happens after that? It goes back to and ERL, external range liquidity, and the cycle continues for the trend. Higher highs, higher lows, higher highs. Hope you get that. You hear me say it a lot, but that's the way it works. All right. So, are we still going higher? Look at these candles here. We have 2 weeks ago, we had this close. All right. Price pulled back, did not respect the showed respect, sorry, to the equilibrium of this big old bullish candle. All right, and did not close below it. All right, but it did close right around, right just below the range of the previous candle. All right, which means what? That there's a good chance we will trade towards the low of the current candle. All right, the next candle comes, it opens, it does not go towards the high, it actually trades towards the low. This big wick, you take the 50% of that range and you're looking for price. If it's going to go higher, you don't want to see, if it's going to go higher, you don't want to see it close with its a body, candle body close below the 50% of this, that wick. All right, but we are trading towards it. Make no mistake about that. And this is an order block. You would expect some resistance. I mean, some support. Sorry, to show up here. But price did close just below that low. That gives me a bearish hint, if you will. All right, it's not truly a bearish indication because it could turn around right here. You know, it just needed to go a little deeper, but it's starting to look a little bit bearish. Got it? It may be drawn towards the internal range liquidity. If we go to the daily, what I want you to see, there's that weekly fair value gap that is untouched. There are those uh, relative equal lows down here, which will be a very nice draw on liquidity. We also have these relative equal lows here. All right, price did sweep that low here, right? But there's still stop losses below these lows. Got it? For people that took longs, price came back, tapped it just so, as what my Caribbean brothers say, just so, man. Uh, it just barely got to it, right? And then it formed another low here. There is liquidity here, and I think that's going to draw price lower. All right, and you can see once it made this high, once it broke that high there, which is a swing high. All right, you know how I like to break it down. You know how I like to break it down. If this is the swing low, this is the swing high. I look for the break of structure. It is bullish. All right, that means we're supposed to be going up. What am I waiting for? Price to find an area in this last leg of structure to find support to go higher. All right, here's the deal. I would have looked here, right? Price did find this low, but that low isn't protected, obviously, because it swept it. All right, we pull back, and where did we pull back to? We did pull back, and price did find some support here for higher prices. Where did it? Where did that momentum start to fade? Right here at this bearish fair value gap. Interesting, right? And what is it? What are these? Descending lows. This is also a draw on liquidity for buy side liquidity. So, where are we at? What are we doing? What are we doing right now is the question. Top. Okay. So, are we going higher or lower? I said, if you remember, going back here, looks like we're trending lower. Price didn't close above that last week, did not close above that high. So we didn't trade towards the previous high. We are trading towards the previous low. And here we are. This is an indecisive candle because it's a low volume day today. It's a bank holiday. We can't expect it to go but so low or high. All right. And we are still at this area where the order block has formed, and we don't know if price is going to start trading above it or below it. Not just yet. We will find out tomorrow, though. Going back to the daily, where are we? Look where this engulfment happens, the formation of a new order block. Right here, right along the same lines as the higher time frame order block, right? So there is a confluence of resistance there. All right. And if we look at it this way, price came back up to retest it like it normally does. And I'm going to put another line there. All right. So we have an area here that has some resistance. I am expecting that resistance to hold for lower prices down to the draws on liquidity down here. Yeah, I do, which would probably mean we're probably going to see the US dollar index move higher. But, there's a lot happening between now and tomorrow. So, I don't want to get too far ahead, but on the daily, you can see obviously this bearish fair value gap. You would think that we were out of the woods with this close right above the high of this fair value gap, but there was an immediate pullback into the consolidation, and we formed a bearish order block here. So I'm looking for price to possibly hold and continue downwards towards these lows. So this 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 line here becomes the draw on liquidity at this low of 23,035. 23,035, sorry. It's 23,024 over here because I got it a little bit low, but it's this low that I'm concentrating on. This low got to come before that. So yeah, we don't have a bullish displacement to hold on to because we've already used it a couple of times from here. That's why it gets eliminated. We're taking this low today, just barely, just so. All right, just barely we took that low, and I am looking for a price to continue a little lower because this candle is negligible today. This order block that was formed Thursday and Friday, that's when I'm really going to be paying attention to because I think we're heading down to this fair value gap on the weekly. All right. I hope that you got something out of this video. If you did, make sure you hit that like button and the boost button. All right. And I want you to make sure you go back and check the videos that I put out earlier today and yesterday. The New Zealand dollar I just put out maybe an hour ago. The S&P 500, I put that out yesterday, along with gold, US dollar CAD, pound USD, euro USD, and the US dollar index, the most important of all of these, all of this analysis, because once the US dollar moves, everybody else reacts, right? So check it out. All right. And I thank you. I thank you for taking some time out on Labor Day, on your holiday, to watch this video. I will see you in the next one. May profits be upon you.